heard about Forex and you're wondering how you can get started with Forex trading and everything. So this video today, I'm directing it specifically to those people who find it difficult to, see consistent profit in the market. This strategy that I'm about to give you guys is simple support and resistance. So now we are going to use the aid of this particular moving average to help us filter out bad trades from good trades, to help us stick with the trend and also give us high probability trade. So stick with me all the way to the end because I'm going to give you this material here entirely for free. Watch this video because this is what I used for years to make money that I was able to, upgrade myself to a professional level trader. So you can start from here, then slowly work your way up. So how does this work? Okay guys, thanks for tuning in. My name is Gislen and in this channel, we share trading tips to help better your trading. So if you're not subscribed yet, please consider subscribing as I share free tips to help better your trading. So as you all know, this is a simple break and a retest strategy. But there are lows in the market that do not work. So some lows will break, but when the market comes back, it sweeps it off like it was never there. So how do you avoid bad trades like this? You're about to find out. So assume that this line on my screen, this curve you see here, is my 50 period smooth moving average, right? This is my moving average. This is assuming that this is my moving average and this is the market. Now, how do we approach the market from these angles? I have put out in place simple 3 steps, all right? 3 simple rules that you must follow. These are checkboxes that you must check every time you see a trading opportunity. And I promise, if you can check all 3 of these boxes, every setup you take, you're going to win 75% out of 100. Okay, so let me get into the video and show you guys how this is done. Very, very simple, smooth and easy. All right, so we are also going to use a tool called the Fibonacci. I think that's something I should have added in these rules. Let me add it. Okay, so I just added it now. Okay, we have 4 rules, guys. 4 rules that we must follow. So imagine that you are able to tick all 4 of these boxes every time you see a trade. You are actually going to be able to filter out so many bad trades, and that would thereby increase your win rate, to a significant amount. Okay, let me get in and explain to you guys real quick because this is going to be very short and straight to the point video. And so first off, you go onto your chart, all right? Go on the 4-hour time frame. Make sure that you are on the 4-hour time frame. Why the 4-hour time frame? The reason is because the smaller time frames have a lot of noise, a lot of price saturation, and a lot going on there. So you mostly see on the smaller time frames, the market will be doing something like the market will just be dancing all over the place, a lot of noise, a lot of pollution, right? But on the 4-hour time frame, everything is zoomed out. Everything is more clear to see. The highs and the lows are more clear to see than on the smaller time frames. So stick to the 4-hour time frame and exercise patience to have the best trade. Okay, so I think 2 best trades in a week is better than 8 losing trades, or maybe 2 winning trades and 8 losing trades. So my point is, use the 4-hour time frame for our maximum results, right? So this is my trend here. Right, you can see the market was trending downwards, and somehow at one point in time the market flipped to the upside. So how does this work? So first of all, you want to make sure that a low is formed in the market, right? So when a low is formed, you wait for the low. All right, first off, you wait for the break of a low. This is a low, you wait for the break, right? Once this low is broken, bam, step 1 has been checked. You check the next box. The next box here says you wait for a retest, right? So this low has been broken. Obviously, price has to come back to this key level. So this is your key level here. You don't just trade blindly off the moving average, okay? Don't just trade because the market has retraced to the moving average you are trading. No. Forget all of this moving average crossing over, you're flipping, all of these things don't work. It's been going on for years, but it doesn't work. There's no record to show that this thing works. There's no record, okay? So you can go onto my old videos, my first videos. You see this particular strategy that I've been using. It's something that I've been using over the years, okay? So I cannot come in here and give you something that won't work. So wait for the market to come back to this low. That's step 2. Now, you have to make sure that this market retests this moving average. The reason I'm saying that is because there are fake out moves. The market might come here and start retracing, and you think, oh, that's the retracement, I'm taking it without it touching here. And the second you enter, it goes up to retest now and stops you out. So make sure that the market comes back to this moving average. So when this market comes here, now you go to the fourth rule, which is make sure that this retracement is up to the 50% Fibonacci level. Some retracements, not all retracement are retracement, right? So typically what this break and retest strategy is trying to, show us is you want to trade the swing points. And a market, a swing point is basically a high or a low that has retraced 50% of the previous price leg. So you will not come on here and be like, okay, this is my Fibonacci. The gold spot here, this golden line here is the middle point. This green spot here is a preferable zone to trade at because this is the premium, and this down here, anything below the 50 is discount. Anything above the 50 is premium. So you want to buy low and sell high. That's how business is done, right? I buy for $5 and I sell it for 10. I make $5 profit. So this is my Fibonacci. This is a selling market and I want to sell at the 50 or above it. That's premium. So if I'm buying, I want to buy lower than 50, or 50. Good. So it makes sense. That's why I'm using the fib. Now we have the fib here. You draw the fib from the high of the price leg to the low of the price leg where the retracement started, right? The retracement here is going up, so this is the swing low. Take the swing low, high it up. If this move does not make it up to the 50%, you are not qualified to enter this market. You might come and do this. This is not a full retracement. This is not a swing high. This here will be a swing high, but this is not. So if this reaches 50% of this price leg, then it is now a swing high. And that is a potential reversal point that you can take. Because when the market enters 50% or the premium area, the market has a very, very high tendency of reversing or continuing to the downside. So how does the market move? First of all, you have to understand how the market moves. The market does not move in a straight line. It moves in waves. It moves in a trend, right? It goes up, it goes down, it goes up, it goes down. But overall, it's heading downwards. So in a downtrend, you often see lower highs and lower lows forming, So when a low is formed in a downtrend, the low will be taken out. A new smaller high will be formed. Then a lower low will be formed, a lower high will be formed. That's how the market moves in a downtrend. So this is an example of that. Now, we know that the market has broken a low. We know that the market has retraced to our key level. We know that this market has made it up to 50% of the fib. We also know that the market has retested our 50 smooth moving average. With all that information, now we can wait for the market to show us some signs of rejection here. Then we enter. Okay, so that's more. There's even 5 because you have to wait for like some sort of, proof that the market is about to reverse. That could be either weak rejections or it could be candle close bearish. Now, in this example here, we have our confirmation. We quickly grab our sell trade, place your stop loss above the moving average, or maybe a recent, I don't know, just do your thing. I'll show you guys on real life examples where you can put your stocks appropriately. Then you can aim for 1:2. Ideally 1:2 is perfect for this strategy. Okay, so you take 1:2, the market continues to your take profit. So the list goes on. You can see how you can see how the market moves. Same thing here. Now, when we have the same move here, we measure it. We measure from the high to the low. We wait for the retracement. Boom, the low is here. Do we have a key level to sell this area? It is at a moving average, yes, but is there a key level to go along with it? We cannot just sell there blindly. It could want to change character. How would you know that? So first off, yes, there's a swing low. Boom, the swing low. So that's a break and that's a retest. Now 50% retracement, check. Moving average retest, check. Okay, it is all checked. Now we wait for what? We wait for confirmation to sell. So we grab a quick sell over here. So this is for, you're not going to have setups like this every day. So I'm going to advise that you look out all of your pairs. Like there's no selective pairs in this strategy. There's nothing like, oh, treat this particular pair, master this pair. You cannot master a pair. You cannot. You might think you can, but it's not. I don't think you can do that. Okay, so open a watch list of all your forex pairs. The major pairs. Don't go and open the other small one. Open the major pairs, all the exotic pairs, right? Trade those pairs. Put them on your list and you look at all of them. you have at least 3 setups a week. So every 50% retracement, if there's a key level to go along with it, sell it. If it's touching the moving average, sell it. These are all the rules I've given you. This is it here. You can screenshot it, keep it somewhere. You can save this video for later and rewatch it as long as you want. So here we have the same thing. Now the market has retraced over 50%, which is really good because now we are safe to sell in premium, right? Then we have the moving average there. The market touched back, pushes back, then the market now retraces. It broke structure to the upside. So what is structure? This is structure here. Market has changed its character to the upside. Now this market is in a buying scenario. So you all know how the moving average works, right? When the market is above the moving average, you are buying. When it's below the moving average, you are selling. So now the market has crossed over the moving average. Of course, now we are looking for buys because why? This moving average is to track the average price of this market 50 days ago. Okay, so it calculates it 50 days ago. That's why it's the 50 period moving average, because 50 days of data, they've used it to calculate the average price. So this is what you're going to use. So if the price is above it, you know that, okay, the price is about to trend upwards. So if you know that the price is gravitating upwards, you want to look for buys. Now the market has broken structure. There's a swing point high. What do? First off, you mark your swing point high and you keep it in mind. You have your swing point high. Now, what is your Fibonacci? Has the market made it up to 50% of your Fib? Use your Fib. Trade from the lows to the highs in an uptrend. Okay, you have a 50% Fib here. I didn't do this perfectly, but it will touch it in real life. Okay, so 50%, the market is there. Is there a key level? The market is there. Is there a moving average retest? It's there. Can I buy? Yes. You wait for a rejection, take a buy, keep your stop loss at least below this green point, and you make sure you're aiming for 1 to 2. So now you are taking twice what you risk in this market. So imagine you winning 7 trades out of 100. You are going to make a shitload of money doing this. Okay, but you are not going to make money if you enter a trade and it starts maybe going in drawdown and you close it. Hold your trade to TP or stop loss. That's how you're going to make money doing this. So same thing here. You can see 50% key level moving average. Now let's go on the live chat and let me show you guys a bunch of examples. Now, how do you add your moving average to your screen, to your charts? First off, you come on here on TradingView. It's free of charge, okay? You don't need to pay for TradingView. Just go on Google, type TradingView, and you're going to have it, right? So you click on TradingView here, indicators, click on indicators, and you search for moving average. So when searching for moving average, you can click this moving average. Click it once, okay? After clicking it, exit. Now this is it here, as you can see on my screen. It has the default settings. Now we are going to go into the settings and make some changes. So what you want to do is you can click on this once, right? Click on it, click on settings. Then you go over here, you see MA. Click on this, blue. I would like to put mine white. You can put it whatever color your theme is, like it. Then this here is the thickness. So I'll choose the level 3 thickness because I want it to be printed out very well on my screen. Then I'll go on input here. This is very important, guys. Change this 9. This is the 9 period moving average. Change it to 50. After that, click OK, and that's it. You're good to go. You can see how the market, the moving average is more smoother and it's giving you clear information, right? Okay. So now let's see how this would work if we were trading here. Now, this is an example of the market trending below the moving average. See how the market rejects, and now we have a clear swing point here that the market has broken out. Now let's check our boxes. The market has formed it. Do we have a retracement to this area? Yes, we do. We do. Did it make it up to 50% of this price leg? So we take our Fib, we draw it from lows to highs. Did it make it to the 50? Yes, it did. Did it touch our 50 period moving average? Yes, it did. All our boxes has been checked. So what do? We wait for signs that the market is pushing up. As you can see here, we had a good sign. So now on the 4-hour time frame, you drop down on the 2-hour time frame to look for what? You're going to look for an engulfing candle here. So you look for the market rejecting this area on the 2-hour time frame. So on the 2-hour time frame, we can clearly see that the market is pushing up with this candle. You can enter here, put your stop loss below this this last candle. You can put it below that, and you aim for 182. So that is an example of a trade that you could have taken using this strategy. So now you don't want to hold this trade and be like, the market is coming back, I'm closing. Don't. You will not see any results. Trade. Don't enter this market and get out, enter and get out and think you're a trader. You're not a trader. Hold your market to your target. Trust me, you'll be more proud if you do that. Okay, so let me show you guys a bunch of more examples and how you can use this strategy. So this is another example, and let me show you guys how you can properly analyze this chart. Now you can see that the market was here, rejected from this low, then took out. Okay, it took out this resistance swing point here. So now this is my resistance swing that has been breached to the upside, and now the moving average lies below this. Okay, so we're going to try this in real time. Let's replay the market and see how this plays with the moving average. Okay, because sometimes people feel like this thing repaints. Yeah, the moving average actually repaints, but after a very long period of time. And before this could repaint, you've taken your trade and you're out. Now we have the high here that has been breached. Then the market now has to retrace to it. What are the rules and how do we check them? So first, our swing point is here. We make sure we have that in mind. Stretch it out. Boom. First off. Second off, we wait for the market to retrace 50% of this move. We take it from the lows to the highest point. And now we have the 50% touch. Then we check the boxes. Has it touched our moving average here? Yes. Now we are looking to buy this market here to the upside. All our boxes have been checked, and you can see how the price looks. After analysis, this is what your market should look like. Now we wait for the only confirmation that we have, which is a reversal candle. You can see here, candle just formed, going up. So this is our entry trigger. Enter there. Stop loss, you can put it on this green, or you can put it tight if you want, but I'll advise you keep it on the green and aim for 182 in the front. So like that, my friends, is how you get a good trade. So thanks for watching all the way through, and if you've learned something from this video, I suggest or I recommend that you go do your proper research or back test. Test this out. Do it like for 3 months or 2 months. Test this out, gather the information or gather the data that you have, and assess that and go through that. Make your own decision if you want to use this style of trading or you want to add some changes to it. The way it fits your style of trading or your way of trading. So I have some links down below, and I train traders to become professional traders as well. So you can look at the links down below and reach out to me. I have courses and one-on-one Zoom meetings that would help you, understand the market better. I also have a link to a free Telegram channel where I post daily updates and free trading signals once in a while. You can join that as well, and you can, be part of my community. So I recently just joined a prop firm, and the links are down below just in case you want to check it out. All my funds were screwed with my forex funds, but I'm getting my feedback up with these new people. They're not new, they've actually been in the game for 7 years, and I want to give their names. You can check them down, link in the bio, in the description. So thank you guys once again. My name is Gislen, and I'll see you guys in my next video.